Welcome everybody. Welcome to today's daily market recap for 27th February 2017 and potential auction paths. Myself Dean, you can get in touch with me on Twitter or you can visit my website getthattradingedge.in. Softwares used for today's presentation are Bell Market Profile and Bell Order Flow. Let me go through the disclaimer. Information shared here is not a trading recommendation and we are not a business of providing any. All information shared here is strictly for educational purposes only. Please use your discretion while acting on the information shared here. We will not be responsible for any resulting profits or losses. Please consult your registered financial advisor before you make any trading or investment decision. So let's go to charts. Give me a minute. Yes, let's go to charts. This is the chart for Nifty today. So this was the late move down, sharp move down in L period, and bears had strength. We were expecting them to find acceptance below this high volume node, as well as repair this poor structure, but we could not manage much range today. We opened just near the value at low inside the range, tested down, found nothing below yesterday's low. So this was a potential failed auction of the prior day's lows, and we moved higher. So this failed auction means that bears could not find anything below this low. There was no new business, and that meant that there was every possibility of prices moving higher and repairing this poor structure at day's high, yesterday's high. But what happened was, as we moved higher in A period, this area, this high volume node, as well as the point of control for yesterday, that found sellers. The sellers in this area, or maybe yesterday the buyers bought here and the prices went higher, and late in the day when the prices came back in J and K period in the same region, buyers again came and bought, but going into the close was below this range. So any buying that happened in this range was stuck going into the close. So when they got a chance to exit again, they took it and they sold here. The stuck buyers from this zone sold here, and that capped the upside for today. Now the volume was very low for today, and that means that smart money was absent. So what happens? Prices come down, but again this familiar kind of shape starts developing. Let me clear this and split the profile here, and again you can see that after rejection here, prices came down and they came down in a B shape. So I posted a comment that markets are getting too short and there is a possibility of a move higher to adjust this inventory, but that did not happen either. The sellers who were stuck here were not in big numbers since the volume was low, so we could not even get a nice inventory adjustment spike today. I was expecting a breach of day's high and then a failure really to go short, but that also did not happen. We just moved higher. One can argue that this high volume node found selling again around this in this J period, but I mean that is all after the fact. There was no real trade today. I did not take any trade today. What happens is, going into the close, market closes below this poor structure for the day. It just closed around that. Still this poor structure is yet to be repaired. So we can say that after this yesterday's spike, a sharp move lower, what we essentially did was, let me just remove the splitting and merge. Yes, now you can see it clearly. What we essentially did was, after this spike down, we built a value near the low of the spike, and that is a development which suggests that lower prices were getting accepted, and we might see sellers uh, maybe stepping in soon to push the prices lower, to check for buyers at lower levels, possibly around this zone or even this zone. So we may see prices either trading here for a while or straight away accepting lower and testing these lower levels. If this kind of development happens, then there is every chance that the first reference itself will cap the down move, and the reason for that is, when this happens, the shape would be a nice Q shape, and we all know what happens when we get a Q shape. We might see I mean, that is for after the fact, but if we open lower below this high volume node and accept, then we may see straight away prices going lower to test these levels. If we find acceptance inside and then break, then there is a possibility that we might repair this poor structure, this anomaly here, poor structure here, another anomaly here, try to repair these poor structure and then again move up. On the upside, we have this poor high to be repaired. So if we cannot find anything below this poor structure or this day's low, and we actually try to move higher, then maybe buyers will step it up. Even sellers would also want to see what lies above, oh, sorry, what lies above this particular high before they can confidently mark prices down. So what might happen if we do not get continuation lower? We might just move up, test above this high, and then see if we have any new business there, otherwise fail. So that is what might happen in case of Nifty. Let us go and check Bank Nifty charts. So Bank Nifty, again, it was a nice open drive. So once we got this open drive down, after that we got a nice V shape developing. Now, since this was an open drive, and open drive is a strong sign of uh, traders trying to leave previous area of acceptance, this particular area of acceptance, if we combine this, we get a larger area of acceptance. Let me show you that this whole value we left with a drive, and that is what tells us that even after this initial V shape, there is all likelihood that at least we will complete what we started in the morning. So this is kind of a ABC move, and we are very close to testing this reference. This one we have already repaired, so this is a possibility tomorrow. If Nifty, Bank Nifty both go down, then we might repair some references on the lower side. There is this anomaly here, then we have a combined profile anomaly here. So this is a high volume node which might act as a support. So all these levels will open up tomorrow if we start finding acceptance lower in both Nifty and Bank Nifty. So on the upside, if this was smart money buying and this was a spike, then what might happen is we won't get any continuation lower. In fact, we'll get a higher open and start accepting here, and then we will move higher to complete the objective of this V shape, which is the open, as well as the high, which is very close to this combined composites point of control. So we might repair these levels by going higher. This is an area where we have nice value developing, so we might argue that if the down move is to start, then the sellers may have accumulated their shorts in this region. So once we reach here, we might see these sellers trying to defend their positions. So this might actually be a very good place to short tomorrow if we go there directly, if we start finding acceptance lower, then we might see continuation and test of lower limits. So this is my analysis for Nifty and Bank Nifty today. I shared a couple of order flow charts during the day, and those highlighted a few setups or patterns which we monitor. One more. There was a question actually. Let me go to that question first. And SAK asked that can you please cover spike rules in today's vlog? Now, spike rules. Okay, I'll tell you how I look at the spike, but I mean Dalton also has some spike rules clearly mentioned. You can refer to those also. But how I look at the spike, there are two visible on this chart. The first one is this. This was a nice spike away from this particular value. And then what happens is we go into a consolidation. Now this spike combined with this consolidation gives you a nice P shape. Generally what this means is that this spike was maybe a forced action, a short covering type of a move, and smart money has taken this opportunity to enter at higher levels and establish their short positions. Now why then this particular thing happened? This is another kind of a spike, but this was intraday and it was repaired intraday. This was a spike which was not repaired intraday and continued in the next day. So what happens is we try to move away from this value. Now we have a profile which is most likely a short covering because of this particular balancing action on the top of this spike. If this spike was genuine buying, then what should have happened is we should have immediately got some continuation higher and then maybe establish value higher away from the spike. Now what happens if you look at this particular shape, which I also highlighted in our daily commentary, it again looks like a D. So we have a spike and then we have a D. So that means we are getting away from value, and that value is actually this one. We have first moved away from this. Even I would argue that let me just. Even I would argue that the actual value from which we are moving away is this one. So we moved away from this value, again formed value, could not find continuation of spike, which was repaired immediately on the same day, and then we have a nice open drive activity, a slight consolidation, and again continuation low. So today's late move is also a spike. So how I would treat a spike is, first of all, the spike highs and lows will form support and resistance. So this will act as a resistance if we open inside the spike tomorrow. So if we open directly outside the spike in the direction of the move, then it is very bearish and lower prices are being accepted and the prices have not gone lower to uncover buying. So we might continue the down move. If we open inside the spike and start building value, then what it means is that the lower prices are being again accepted. So this also suggests that we might not have gone low enough to find buyers. So again we might have a test of lower prices, but this activity won't be as dynamic as this activity. And the second thing is we might try to move higher and then find that the sellers who were this, we don't know whether this is an attempt at accumulation or redistribution. So if this is redistribution, then in this general area we will find sellers defending. So if we reject from here, then it is actually pretty bearish and we will definitely take out the lows here. The one more thing is, if we directly open above this spike high and start finding acceptance, this will negate this whole bearish action, and it would mean that smart money was actually accumulating in this zone, and this was a spike down to take out the stop losses of weak buyers, and now the smart money has actually opened the prices way out of this spikes range. So any new buying would also be very they won't be able to they will have to follow the price, run after the price. And anybody who is going home short in this kind of open scenario will be forced to cover their shorts, and that will lead to further move higher. So all this thing is possible, but then this is only for tomorrow. If we look at the long term context and how the market is developing in the context of past few days at least, then we get the complete picture. So a spike rule would be simple, that the top and bottom of the spike will act as support and resistance. Generally, according to Dalton, it acts as support and resistance for the first time. So if something like this happens, we come down and we again come here, then this particular high or low is likely to give way and we might move higher. So I mean, this is what Dalton has said. But again, their markets are a bit different. Our markets are a bit different. We stay imbalanced for extended period of time. Extended as in even in short term scenario also, like our markets can easily open lower and continue lower, and then after a few days consolidate and again go and test this level. So this kind of activity is possible in Indian markets. The same which happened here, you can see. I mean, this was a spike. Even if this was a short covering, according to Dalton, coming into the spike once, coming into the spike second time should have resulted in a test of this value area. But what happened was we moved higher. Anybody shorting in this range, we forced them to cover. Once they were thrown out of the market, then we come down and continue the move lower, and possibly we will repair all these high volume repair, as in we will revisit them and see if the buyers are still interested in defending those levels. If not, then we will see the down move accelerating low. So I hope my take on spike is clear from this video. If it is not, please do ask questions on it. I'll be happy to answer it again. So I think that is all from my side today, and we will meet tomorrow. So thank you for listening.